90% of traders lose money, and most don't even know why they are losing their money. I used to be one of them, blowing accounts, jumping from one strategy to another, overtrading, getting emotional. But I figured out something out, and it completely changed the way I trade. In this video, I'm going to show you why most traders never win and what I do instead to stay consistent and profitable. Let's keep it real. Most traders treat forex like a get-rich-quick scheme. They want to flip account from $20 to $2,000 in a week. They trade 10 pairs at once. They enter without confirmation, no journaling, no risk management, no control. They watch 5 minute YouTube video and expect to be profitable. They follow signals without knowing why. They get lucky once and blow the next account trying to repeat it. That is not trading, that is gambling. I was tired of losing money, tired of second guessing every entry, tired of hoping trades will win. So I changed everything and simplified my approach. Here's what I did. I chose one particular pair and I studied it like mad. I picked one section so that I could focus, and I mastered one setup, just one setup. That is it. One pair, one section, one setup, and now I repeat the same process over and over and over again. Let me show you the setup that changed everything for me. It's simple and very powerful. Okay guys, this is the only setup I look for, and when it shows up, I take it without hesitations. First of all, I need to watch out for my break of structure, which I will mark out from the 4-hour time frame. Now, I will also mark out the origin that causes the particular break of structure. Let me show you what it looks like. Now, this is the market chart. First of all, we mark out our break of structure. This is our break of structure. You all can see it there. Our break to the upside. Now, the second step is mark out the origin that causes the break of structure. This is our origin that causes our break of structure here. The origin is the last candle, the last consolidation candle before a bigger move to the breaking of, which causes the breaking of the structure. Now, after marking out this particular origin that causes the break of structure, what we need to mark out is our fair value gap. This original is called the order block. It's called the order block. So any order block without a fair value gap is invalid. No order block. If there's order block and no fair value gap, invalid. We are not trading it. If there's fair value gap, no order block, invalid. It is invalid because you can't be trading only a fair value gap without order block, or you might trade the fair value gap with, let me say, a little confirmation in a lower time frame for a liquidity sweep or a change of market structure before you're able to trade a fair value gap without an order block, an order block. The same thing goes to order block. If there's order block without a fair value gap, you wait for a confirmation before you can trade it, but that is very risky. So I prefer trading this particular order block with a fair value gap. That is the one I mostly prefer. You understand that, guys? So now, after seeing our origin that causes this break of structure, which also serves as our order block, and you need to mark out our fair value gap, which must be beside the origin. This is our fair value gap. And after marking out our fair value gap, what we need to do is to go down to the 15-minute time frame and look for our liquidity. Now, down in the 15-minute time frame, price might be something like this. Price might do something like this, like this, like this. This is what the 15-minute time frame will look like. This is what it looks like. Now, this is a 15-minute time frame structure, which can also serve, all these places can also serve as our liquidity. This is our liquidity. Our liquidity. And after seeing this liquidity, what we need is a liquidity sweep. Once price sweep out the liquidity residing here, tapping into our fair value gap and also our order block, then who will be buying from this particular area? This is the setup I need. Now we need price to do something like this. Move up and sweep out the whole liquidity residing here, giving us a tap into our entry. Then boom to this particular place. Now this is how we'll set it here. Our entry should be residing here. Our stop loss should be below the order block. Now our TP should be 1:3 or above here. This is it, as easy as that. For a very good structure, to understand it more, you need something like this. Let me draw it very well so you can understand it. Now, I hope you understand this particular structure. Let me show it. It's just like the same thing. Break of structure. Origin across the break of structure with our fair value gap attached to the origin. Liquidity. And boom, sweep of liquidity, and boom, our entry. Stop loss below here, and we are good to go. This is the exact thing that we need from the market. Now let me show a real market example. This is yen basket. As you can see, this is a 4-hour order block. Let me show you guys. I've done my analysis already. So this is our latest break of structure, and this is our 4-hour order block. Marking out this 4-hour order block, what we need for price to do is to cause a liquidity. Now, men looking at our 1-hour time frame, you can see our liquidity already. This is our liquidity already structured out in the 1-hour time frame. So all we need from price to do is that price should sweep above this particular place, sweep above this liquidity, tapping into here before doing what? Pushing to the downside. That is all we need for our yen basket. Let's also check for our euro USD. In our euro USD, this is what we're expecting to from price to do. Now this all this here serves as liquidity. Price swept the whole liquidity, tap into this order block, and boom, pushing to the upside. Now price created a new change of character to the downside before sweeping this liquidity. What we'll be expecting from price to do is to tap in here. Now this is our liquidity. Let me take this off. This is our liquidity. You can see our liquidity residing here. All these are liquidity. Which we need price to do, or to sweep. Once price sweep the liquidity, then it will do something like this and tap us in, and then we are booming to the downside. That's all I need from euro USD. So I hope you guys understand this particular video. Here's the truth. The setup is important, but mindset is what really makes the difference. Most traders panic, they over leverage, they trade out of boredom, they take revenge trades. I don't do that anymore. I wait for setup. I risk same amount every trade. I accept loss without emotions. I journal my trade every week, be it loss or profit. I journal everything down. That is how you trade like a professional, not just like a lucky beginner. Now here are things you should do instead. If you are losing consistently, stop chasing the market. Pick one particular pair, pick one section, master one strategy, backtest it, track it, journal it, trade it like it's your business, not a game. It won't be flashy, but it will be consistent, and consistency beats hypes every single time. Most traders never wins because they try to trade like everyone else. I win because I trade with focus, and you too can do the same. If this video helped you a lot, leave a comment saying I'm ready to be the 5%. And if you want mentorship, trade breakdown, or daily setups, the links are in the description. Don't forget to like, subscribe, and I will see you in the next video.